My point is that gold makes new highs. Silver doesn't necessarily make new highs until there is a full-blown monetary panic. Silver always advances in the very late stages of a monetary apocalypse. And since this monetary apocalypse is going to be the worst of the last 2 centuries, at least, and I think ever, yeah, we can expect silver to really take off at the very, very end. So once silver starts taking off this time, you're probably going to be too late. You got to get it now. You don't have to. I'm not recommending anything. That's just what I did.
In the last 50 years, the price of silver has fluctuated, rising and falling with changes in economic factors. On January 17, 1980, the spot price of silver hit a high of $49.45, with an average peak of $20.98 for the year after a decade of languishing below $10 an ounce. The Minerals Council of Australia says the same monetary policies and investments expected to drive up the price of gold by 2030 will also push its poor cousin along. The MCA predicts silver prices will surge 27% because of increased demand for silver in consumer electronics and solar photovoltaic cell production. Prominent financial analyst Rafi Farber discusses recent highs in gold and silver, noting potential implications for future market movements. While reflecting on the market trends, Farber points out silver lagging gold until a monetary crisis peaks. He warns that the impending crisis could be severe, and once silver starts rising, it may be too late to buy. According to Rafi Farber, a rare technical signal suggests the Golden Cross, which has appeared only 4 times since 2002, emphasizing this signal usually points to long-term gold appreciation. He believes the current crossover marks the end of the recent bear market, predicting significant gains for gold relative to other commodities. Overall, the Bloomberg Commodity Total Return Index ended down 4% in July, with gold the notable exception amid increased rate cut focus. Based on historical correlation, Farber analyzes gold's performance from 1970 to 1980, noting a similar phase now, with recent highs likely followed by a pullback. He predicted that gold would surge after this correction, similar to what happened in 1979. The latest Kitco News Weekly Gold Survey shows that most industry experts and retail investors believe gold will rise above this week's recent all-time highs. Now, we present the clips of Rafi Farber's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
And now we have a major technical signal here, very rare, that just happened last week, or maybe 2 weeks ago, maybe this week, something in the very, very recent past. And you can zoom in on this chart by looking at the gold to CRB ratio on stock charts. And we have here this signal where the blue line crosses over the red line. That is a golden cross to the 50-week moving average, rises above the 200-week moving average. It happened in 2002 at the beginning of the gold bull market, signaling a gold bull market, not in commodities terms at that point, but in dollar terms, definitely. And then it happened again in 2006, not again until the beginning of the next stage of the bull market in late 2015. And then I checked, did it happen here? And I'll show you that it didn't. There was no cross here. The blue line stayed just above the red line. So the last time this happened was in 2015 at the end of the last bear market. And it should happen now at the end of this bear market, which ended in 2023, at least in gold to commodities terms. So this is a very, very rare signal, and it usually signals long-term appreciation in gold relative to other commodities, and that will obviously translate to dollar terms one way or another. Now here's that zoom in on that question mark box. You see here that the blue line did not quite cross below, so it couldn't cross back above if it didn't cross below. So to confirm that this is only the 4th time since 2002 that this has happened. A chart from Gold Charts R Us. We see that from 1970 to 1980, gold hit a new high finally after the 1974-1975 high of just under $200. We hit a new high by October of 1978, and then there was a big pullback back down to 200 from about 250, 255, something like that. Big pullback by December 1978, and then only after that pullback was the takeoff. So I believe we are somewhere in here. I don't know exactly where. This is October 1978 at the top, the tippy top here. But since we've made new highs in gold for a few months now, or was it weeks? I don't remember how long. Not that long. We're somewhere in here, late 1978, very late 1978, and there's probably going to be a pullback, and it's going to be scary. and you're going to have to hold on, or you don't have to hold on, but I'm going to hold on. And then after that, we're going to enter 1979 and then just pretty much go straight up with some scary pullbacks, but not as scary as this one. I don't know for sure if this is the story, but I'll show you why I think that for other reasons in this next chart here. So this is the same scale, right? 1970 to 1980. And we see here when gold was making a new high at 252, 253 over here, and it looked it was going parabolic, only to have a little bit of or a big bit of a pullback. Silver basically was doing almost nothing. I guess this is like a seismograph. It's like a little fart. So silver basically farted. The highs from 1974 were not surpassed as gold was making new highs in late 1978. Silver was doing pretty much nothing, being very boring. And then only after that gold pullback did silver finally start to take off in early 1979. And then there was a little bit of a rest, not exactly a rest. It was still trending higher until mid to late 1979. And then all of a sudden, there was the parabola of the monetary panic. So my point is that gold makes new highs. Silver doesn't necessarily make new highs until there is a full-blown monetary panic. Silver always advances in the very late stages of a monetary apocalypse. And since this monetary apocalypse is going to be the worst of the last 2 centuries, at least, and I think ever, yeah, we can expect silver to really take off at the very, very end. So once silver starts taking off this time, you're probably going to be too late. You got to get it now. You don't have to. I'm not recommending anything. That's just what I did.
While sharing a chart from GAN Global, Rafi Farber highlights a 60-year cycle in gold stocks. He notes that gold stocks saw a significant rise on September 11, 1964, which could suggest a similar move by September 11, 2024. Although Farber is uncertain if this prediction will hold, he finds it an intriguing signal for those who follow cycle theories. Gold is on the cusp of a massive 45-year breakout in inflation-adjusted terms. This is important because the inflation-adjusted gold price is the best long-term fundamental indicator for gold stocks. The gold stocks are sensing this as, technically, GDX and GDXJ are very close to significant breakouts. Gold looks to continue to trend higher to its cup and handle the measured upside target of $3,000. Meanwhile, miners and juniors are in a prime position to leverage this move. Farber's assessment mentions a significant 400,000-ounce gold withdrawal from an iShares ETF, the second largest on record. He suggests this could indicate major underlying activity in the gold market. Let's get back to the interview.
Now, this chart is from GAN Global. I am a subscriber to him. I hope he doesn't mind me sharing just one chart from his recent video that I just got this morning. This is just a Barron's gold stock chart from the 1950s, 1960s. And his point here is to say this is a 60-year cycle. He believes in 60-year cycles. I don't really have an opinion on cycle theory. I'm not a technical trader or a cyclist, but I do like to see what they're saying because I just want to know what's out there. So he's saying here that gold stocks until September 11, 1964 would be 60 years ago today, or 60 years ago 2 weeks from now. They started taking off in September 11th, 1964, so that would be September 11th, 2024, which is in a few weeks. We'll see if it happens. We'll see if he's right. I don't know. But it's just another signal that we could be in that 60-year cycle if you believe in such a thing, if you think it's relevant. Now, something quick that I just noticed, and I put this on the Endgame Investor on Substack. There's something going on with IAU. That's one of the ETFs. I forgot who. It's not Spider. I think it's iShares, and I think that's managed by BlackRock. So something is happening to that ETF. There was a huge drawdown in the amount of gold in that ETF this week or last week, about 400,000 ounces, something like that. And that's the second most daily amount ever for the ETF. And the first was in October 2023. So yeah, there's something going on in this ETF. I don't know what it is, but when big things happen in ETF, there's something going on, maybe with gold leasing, maybe with speculation, maybe with central banks. We'll see. But it's a big movement. And if there's a big movement, big things are probably happening.
According to Bank of America investment strategist Michael Hartnett, investors should buy gold even as the metal hovers around record-high prices. However, silver has outperformed gold this year, beat all market expectations by a large margin, and will continue moving up. What strategies are you considering to position yourself in the gold and silver markets as these potential trends unfold? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.